and we are back in our Perpetual live episode here from Dubai at Token 49. I got my co-host back.
I'm back. Yeah, good, refreshed.
Good.
Refreshed.
And right now we've got a head of vol trading at Laser Digital over here, Nikhil. Welcome.
Thank you.
Vadim, founder of Edge Capital. How you doing, guys?
Good.
Oh, good.
Well,
Thank you so much for inviting. Yeah.
Yeah, no, thanks for coming.
It feels cold for me, so.
So Vadim, tell us about Edge Capital, what you guys do.
Yeah, so we're a DeFi hedge fund. We are one of the larger TVL providers in the DeFi space. We like supporting DeFi ecosystem, coming to the projects, sizing the positions, providing them liquidity, helping them jumpstart. Think about it as projects like Etherfi, Eigenlay, Athena. They all need initial liquidity, right, to take off. That's why we would come in, provide them dollars, Ethereum, Bitcoin, take a bunch of the equity, joking, right? Exactly, help them grow, connect them in the ecosystem, right? Negotiate the terms. If they succeed, we make money. If they don't succeed, we don't make money, right? But it's effectively a form of early stage seed capital provisions. We probably did about 150 different deals in the past 5 years, 20 illiquid or private deals in the past year, and we have enormous amount on the pipeline. We have like more than 100 right now. That's coming.
What's the kind of hit rate and the success of that? Because it's kind of a VC type that approach, right?
That's a very good question, right? So the way we measure it is effectively your principal is always intact, right? Because we take venture risk on the yield, but we do not take venture risk on the principal, right? So think about it as that we would provide, let's say, $10 million of liquidity to a smart contract, right, for a period of time. And we get the tokens. If they succeed, tokens take off. If they don't succeed, tokens don't take off, right? The difference on FDV. Usually, in 80% of cases, in 8 out of 10 in the past 4 years, we got much more money more than we expected, than we were hoping for. And then 2% out of 10, we get less than we expect. But we never really lost money on this type of trades unless, the product would disappear, right? Something, or there's a hack, right? So that would be core risk.
Yeah, interesting. What was your background before this?
So, PhD in macro from UCLA, 15 years in TradFi, was with the IMF in DC.
Wow.
Yeah, I was at the board of the IMF. So then moved to London, worked for Bank of America, was running the fixed income FX desk, moved back to the US, was running a hedge fund, global macro, with about $2 billion in assets, doing FX rates, options, swaptions, derivatives, local bonds in different emerging markets. Then switched to crypto and said, look, we can make much more money with much less risk, right? So why would I invest money in places like Argentina, Ukraine, Russia, right, or Africa, if I can invest money in fantastic places, like a bunch of DeFi protocols, right?
Vadim, on the DeFi side, like one thing that I feel like after FTX blew up and all the scandal that happened, I felt like DeFi very much went on the back burner a little bit. And certainly the institutional capital really focused on Bitcoin, things like that. Do you think with what has come about with the Trump administration and the fact that he's installed crypto-friendly people in the SEC and various places, do you think we're going to get a DeFi summer? And if so, how far are we away from that?
That's a very good question. So in our opinion, it's a 100% a structural shift, right, overall. So the U.S. elections was a structural shift for DeFi and for crypto in general. Regulations are better. All the lawsuits were dropped, right? It's very pro-crypto overall, right? So that's why everyone is looking very positive with this. DeFi Summer started a year ago, right? So I'll give you an example. Like 2 years ago after FTX, we would have like one project a month coming to us asking for liquidity. Back then, it was just yield farming, right? So they would give you tokens, you sell them right away, so on. Since Athena started basically in November 2023, right? It changed a lot, right? So we have about 10 projects a week asking us for liquidity.
Wow.
Back then it was once a month, right? As I said, we have more than 100 in the pipeline. A lot of super smart people from the US and Europe doing this. And if you look what happened the past year and a half, you had, what are the biggest names would be, right? So it's Babylon, Eigenlay, Etherfi, Kernel, Renzo, a bunch of risk takers, right, who are doing it very successfully. Athena is one of them, like $5 billion company, basically saying. So I would say we are in the environment when things are progressing really well, right? Still, we think that 9 out of 10 of this project is still venture risk, to be honest, right? So they do very early stage token issuance. Going forward, let's say at the landscape of things we see a lot of even TradFi people trying to tokenize fast. They're trying to issue a token because it's a faster way to get liquidity. Is it really DeFi or not? Not really. Imagine you have an AI agents in blockchain. It's not really DeFi, but then they do payments in DeFi. Then they want to do leverage. Then they want to do something else. So everything that's based on a leverage lending, tokenization of assets is pretty much DeFi, right? So will it be the same as we had before 3-4 years ago, pre-FTX? I don't think so, because honestly, what we had in the past, we had like 50 different small DEXs, 50 different lending protocols that didn't all the same. They created programs that were points on points on points, which was worth nothing in the past. Now at least we have sustainable products. Most of them are concentrated in a lending, like Aave, Compound, swaps, like Uniswap. Third block would be restaking on Ethereum. This is basically Ether, Renzo, Kelp. And the fourth one would be restaking of Bitcoin, right? Think about it. Bitcoin generates zero yield. How can you generate at least 3-5% a yield on Bitcoin, right? You can trade options on Deribit, which is many people do. This is a fantastic solution, right? You can sell calls, puts, everything, structure it, right? This is what people do. It's one venue. You take risk, you cut the upside, but you generate yield. Very TradFi approach. Second option, you can do restaking, right? So like basically allow Bitcoin to be used in other chains to generate yield. More sophisticated, very new, but it's working. So Babylon just did token issues. They're trading about $700 million, right? So, and the fourth option is effectively start deploying to hedge funds, right? So taking more risk. So this is all TradFi, right?
Yeah.
This is all TradFi approach. You pick whichever you want to do, but the fact that Bitcoin is like $2 trillion tells you that this is an asset class that must be somehow commingled with DeFi and scaled up. Right. And we see a lot of these things happening right now in Morpho, for example. Morpho has a lot of, and Aave has a lot of Bitcoin, which is put as collateral. And there is a lot of lending is done against Bitcoin, right? For example, it's public information that Coinbase is effectively became a very big player on Morpho right now by borrowing stables against Bitcoin directly, right? Which is like fantastic. It's like very low rates. You eliminate intermediaries, fully decentralized. You're not taking counterparty risk, right? Which helps you a lot. So this is like a short spectrum of things. And the next layer, what we see, so the next layer is still coming, in my opinion. Think about it. So Ripple, what Hidden Road, right? So Hidden Road, I don't think they do much in DeFi as far as I know, right? So, but this is the next phase, right? Why can't you use billions of dollars of leverage on Aave that is not touched yet, right? Aave has 30 billion in assets, and many TradFi brokers are not using it, right? I think this is coming, right? Some of them started doing it very slowly. They touch it up. But this is the next phase, right?
Yeah.
And all the protocols, all the new companies will do this. They would come to this. It's like in TradFi. Think about it. Take leverage credit in TradFi. People make like 7, 8, 10%, but they lever it up. They make much more money.
Yeah.
We'll do the same stuff, right?
Yeah, we're going through the same way.
Once it's get bridged.
Nikhil, let's talk Vol.
Sure.
So, Bill, head of Vol over there at Laser Digital, right?
Yeah.
And the main observation I'd say right now that low Vol is Vol, well, it's just versus asset class.
Yeah.
Crypto Vol's so cheap relative to other asset classes.
Yeah.
Is that an anomaly? Is it a screaming buy down here, or is that a structural shift that is going to remain for a long time?
I mean, obviously, like the thought process has always been right. As more market makers come in, volatility decreases, vol comes down, right? But still, like right now, as everybody here, other guys has probably spoken to, right? It's for the lowest fall in a year. I wouldn't advise being shorted here. Neutral is maybe a different way to go about it, but then if you go along it, how do you offset the theta, right? Because we've been stuck between 92 and 96 for the last week or so, and vol keeps bleeding. I mean, I don't know. I think last time when Trump was president, right, like I was viewed as like he's not a president to maybe invest under, but definitely to trade under, right? It's like pretty unpredictable. So I mean, I'd like to be long vol, right, a little bit gamma because you never know when something comes out. But as you can see, like the last months, right, like sometimes he front runs his own news, and because it's so frequent, the velocity of like different news from him, and with the tax stuff and like the interest rates and tariffs, like. People become desensitized to the information a little bit now.
Yeah.
So I don't know what the catalyst will be to where we get out of this range. But yeah, I'm hoping soon. But this is pretty cheap, I'll be honest. Like, I still.
Are there any like favorite trades being in the vol space? Are there any like favorite trades you tend to like doing? Do you like the relative value spread between ETH and Bitcoin? Is that a popular trade for you? Or
I mean, I'll be straightforward. Like if it's this cheap, I just want to be along it, right? Like, you can go more beta beat that even like ETH's and pretty constrained relative to Bitcoin in terms of volatility, right? Except for like a week ago or whatever. But yeah, I mean, it's pretty simple, right? Like if you think vol's cheap and you want the gamma, buy the straddle. Okay, like it's not too
And
complicated.
in terms of hedging the gamma when you're long, like vol, is there like, do you do a lot of work in terms of identifying optimal hedge frequencies and things like that? Because I think it's very cyclical the way crypto trades throughout a week, right?
Yeah.
So is there like, and weekends obviously, usually they're pretty quiet.
Yeah.
So like, and because the 24-hour market is like TradFi, where I've got, how many hours in the day that I can trade, and I can't scalp my gamma while I'm sleeping.
Yeah.
But do you find that actually is something you can do in crypto, and it allows you to kind of squeeze more juice out of the gamma if you're long it?
I mean, well technically, right, from a 1,000-foot level, everything is a lagging indicator, right? So you can't really predict the next thing's going to happen, right? It's all historical data, right? Now, obviously, yeah, when you're sleeping and if you're not fully staffed 24/7, you want to put hedges in, or you want to have auto hedges if you're going, or whatever it may be. But at the same point, right, like when you start hedging gamma too tight, that kind of defeats the point of the trade.
Yeah.
So I mean, it's relative to how big your balance sheet is, what your risk tolerance is, your confidence in the trade, right? I mean, yeah, for me, I mean, like, yeah, I don't want to hedge it too tight, right? Like, what's the break even? What's the premium of the strategy you paid? How are you looking at it? You looking at it as like a vol trade? Or you looking at it as like hey, we outlaid X amount of premium. Can I withstand the loss on that and see where it comes back, right? So I think the risk tolerance is different amongst who does it or what their thesis is of doing that trade.
Before I let you go, like, something I've noticed in crypto vol is that the term structure of the skew is very volatile.
Yeah.
Right? So the front end skew is extremely sensitive to which way spot is trading.
Yeah.
But the long term skew is actually structurally quite
Call.
stable.
Yeah.
It's always in call premium.
Yeah.
And I've kind of been leaning on that longer dated call premium as almost like a regime indicator.
Okay.
So if we're in a bullish regime,
Yeah.
long dated skew is just in calls all the time.
Yeah.
And I kind of think that if that flicks to puts in like 6 months and longer,
That's
it's
it.
kind of the options market's way of saying this bull market's done.
Yeah. No,
Yeah?
Yeah, I don't know how many times it actually has happened, if at all. But like, yeah, I mean, obviously that'd be like a something new in the market that we really haven't seen. So obviously you have to, it's like a signal, like you're saying, right? Like, but like I said before, right? Like even when you view the skew changing in the front or flipping in the back, where it may be, it's kind of lagging a little bit, right? Like, just because we're down and not everyone's traveling for puts in the front because it's near term, downside protection or whatever it may be. The second we tick up, thing flips and we go the other way, right? So it's like, yeah, I mean, there's always like a.
But do you think that mean reversion is that worth? Do you trade that mean reversion quite actively?
I mean, yeah, I mean, there's a level to do risk versus swaps, right? Like, what is that spread on the risk versus swaps and be delta neutral and keeping that swap on? Yeah, I mean, if long-term skew, dips too low, then there's a price to buy it, right? As protection. But obviously, like, yeah, we're in crypto. We believe in crypto. We think we'll go higher. But if you're delta neutral, right, just at the end of the day, it calls it, puts a call if you're hedged, right? So then, yeah, if someone's giving you like, the optionality with being skewed too low to put or whatever you may think, then yeah, you put it on, right?
All right, guys.
Yeah.
I think we've won a day there.
Yeah, really interesting, guys. Thanks for coming on.
I appreciate it.
Appreciate it. Thank you, guys.
Thanks a lot, guys.
Enjoy the sun.
I think.